Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Nadeem Raza, who's CEO, Nick Wightman, who's CFO, and Microlise Group. How are you today, gents?
Good morning.
Very well, thanks. Good morning, Zak.
Good morning to you. I follow the story and can't help myself actually following your story because it's an interesting one, and you are doing well. I suppose the only thing in the wake of the results that you've published this week, maybe you can just talk to us about the cyber incident and whether it's affected your company.
Sure, Zak. Yeah, I mean, I think you'll see some elements of that covered in the accounts and the annual report. I think as a business, obviously, it did impact us for a couple of weeks in November last year, but I think that's well behind us. We didn't lose any customer data. We didn't lose any customers as a consequence of it, and I think it's very much business back to normal as of about the middle of November. We have had to show some adjustments in our accounts because of the timing of it, but it's fair to say that those adjustments will be netted out in 2025 as we recover those funds through our cyber insurance. So we fully expect all of those adjustments to be taken out, but purely as a timing perspective, we've had to put them in.
Right, so basically that's all done and dusted. You've, in a way, ironically, you've sort of stress tested the business. So that was a scenario that you can now cope with, or it will be. What is interesting, I suppose, to me is that before that incident, the shares were around £1.30. They're now £1.12. And I would take the sort of guess that if somebody likes your company, it's like 20p cheaper than it was in the autumn. And your other metrics, all your metrics on a like-for-like basis are still growing.
Yes, that's right. I mean, we've overall, if you look at the revenue and EBITDA figures, etc., the adjusted ones, you can see that we met market expectations for 2024. In fact, EBITDA was above market expectations for 2024.
As was cash.
As was cash, as Nick points out. And we've also just released sort of 2026 numbers, I think, via various analysts who've started reporting those through on their reports. And so, the forecast from analysts shows us continuing that growth trend into 2026. So I think, we're delivering based on market expectations. Obviously, I think there's lots of other economic backdrops that are impacting not just our share price, but share price across lots of companies, unfortunately.
Right, but I mean, the metrics, and maybe this is one for Nick, I mean, it all looks good. ARR looks good. EBITDA, 20% looks good. I suppose it's just a matter of sustainability now.
Well, yeah. I mean, we plan to sustain the increase in those metrics. Is the answer from my perspective. Is we've got ambitions to continue to increase all of the key metrics in terms of revenue, gross margin, EBITDA percentage. So we're obviously putting a lot of focus into driving the margins upwards, which we can demonstrate that we can do successfully, and we are going to continue that positive trajectory.
And in terms of the business, what will be the drivers? Is it acquisitions? Is it sales? What's the driver there on that front?
So it's a combination of organic growth and M&A. I mean, I think we've been able to demonstrate good organic growth over the last few years. There's nothing to indicate that won't carry on. That it should carry on because we're growing in the UK. And in our foreign markets, Australia, France, New Zealand, etc. But layered on top of that will be further M&A, and we have about £40 million worth of cash available to us to do that further M&A. So we're just focusing on finding the right target opportunities to execute on.
And just finally, in terms of the lay of the land, you sort of said that, obviously, if you read the paper, you see that it's just like a horror story as far as the economy and taxes and everything else domestically. But what's the lay of the land in your area, and do you still have the edge that maybe that we've discussed previously?
Well, I think the main thing that we're seeing from our customers, particularly our direct customers, is there is a real focus on efficiency and increasing utilization of their transport assets. That's vehicles, drivers, etc. And really, that's what our solution is all about. We're there to help them do exactly that. So, I think we've got a great story as far as our customers are concerned, and certainly, as you can see from the figures, they're continuing to buy from us, which is great news.
On that note, Nadeem Raza and Nick Wightman from Microlise Group, thank you very much indeed.
Thank you, Zach.